We are now seeing record-setting oil prices, which is causing a serious pain at the pump. But the question is, could these high gasoline prices cause us to enter into a recession? And is there anything that we can do about it? That's what we're going to cover in this video. So guys, smash that like button. And if you're new to the channel, please hit that subscribe button. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So gasoline prices are very high. There's no getting around that. It costs almost double, if not more than double in certain areas to fill up your car than it did a year ago. And that's a real challenge for everyone. But the question is there a potential that these higher gasoline prices will reduce your budget or your wallet to the point where we could actually trigger a recession? And so that's kind of what I wanted to investigate. So you can see here that there's actually an article on this from economicshelp.org where somebody did ask the question, do rising oil prices cause a recession? And in that yellow highlight, I actually just gave you the summary of it. High oil prices pack a 1-2 punch to the economy. So the first item is higher oil prices reduce disposable income, leading to lower spending. That's exactly what I was speculating at the beginning of this video. And then the second part about that, or the second punch, is that higher oil prices push up inflation, causing central banks to increase rates. So it seems as though they could be a leading indicator into a recession. And let's dive deeper into those 1-2 punch items. So the first item here is rising oil prices have a significant impact on inflation. And essentially what's happening here is that indirectly, all goods which are transported will effectively see rising prices. And just from the perspective of someone who has worked in the transport business, the biggest cost is fuel, especially diesel. And you guys know what's happening to the diesel prices right now. They're through the roof. So if the largest input for these trucks to transport the goods is going up substantially, well, that gets passed through and effectively gets reflected in the prices for the consumer. So higher oil prices do inevitably impact the prices for everything that we pay for. So in other words, what I'm trying to say is that there's a high correlation between higher oil prices and general overall inflation. And then what exactly does that do? Well, it leaves lower disposable income for consumers. So you can see that when consumers face rising living costs and their disposable income does not go as far anymore, which occurs because of rising oil prices, we get higher prices and less demand, which is a situation that could lead to stagflation. And that is a term that I'm sure you guys are hearing a lot of now. And so what this chart is doing is it's just illustrating how higher costs of fuels could result in lower spending, which ultimately reduces economic activity. And that's what they call cost push inflation. So generally rising prices for commodities is what will lead to cost push inflation. And it's not like we're not seeing inflation, because you can see with Walmart's latest results that Walmart's earnings were dented by food inflation and of course staffing costs. And when you read into the results of Walmart, they did say that the consumer is purchasing less, and so they are trying to address that by being more price conscious on these staple type items. In fact, what Walmart is doing right now is they're taking it on the chin. They're actually reducing their margins for those most important products. And so inevitably, in order for Walmart to maintain their profitability, they're gonna have to push those costs out. And so it's very likely that we will see that in the coming quarters. And you can see the market did react to Walmart suggesting that they are taking the margins on the chin right now, where the stock price declined over 11% on the day when they released results. It's very clear. Walmart, this is not a stock that swings up and swings down. This is the largest retailer in the world. So the fact that their share price dropped 11% shows to you how scared the market is of cost push inflation right now. Now, everybody looks at the price of crude as to the reason why the gasoline prices are going up. Now, it is an input. However, there's another issue going on. There's a refinery bottleneck in North America. So you can see here that the Wall Street Journal just put out an article saying that there's bottlenecks in the fuel process, which is causing record high gas prices. So the reduced global fuel making capacity is holding back supplies. Refinery bottlenecks could potentially increase fuel prices even further, especially if there's an active weather season this year, so hurricanes, that shut down southern refineries. And moving on, you can see that a shortage of fuel making facilities is pushing US gasoline and diesel prices to record levels. And from that chart, you can see that from 1982 to 2020, the number of US operating refining facilities has declined. Gasoline prices have now topped $4 a gallon in all 50 states in the recent days for the first time ever. But the primary culprit behind the pain at the pump is a lack of global refining capacity, and especially refining capacity in the US. The problem is now that there are much fewer refineries, and the refineries that do exist, some of the owners of the refineries are still looking to convert those into different types of fuel product refineries, not necessarily gasoline. So there could be more pain coming. And so the question really comes down to, are Americans changing their driving habits? So it says in this article that despite the persistence of the COVID-19 virus, global demand for oil and gas has essentially recovered to pre-pandemic levels. Now, I'm not seeing a recovery to pre-pandemic levels. I do see a recovery early in 2021, but I do see a decline right now. We'll see if that usage amount moves upwards once we enter into this summer driving season. And you can see it's not like there's a utilization issue for the US refineries. The refineries are operating at approximately 90% according to the EIA, which is at the top of their 5-year range. So you really are at the measure of weather right now. If there's some weather event that takes out some refineries, you're going to see those gasoline prices go way up. Assuming, of course, that the crude prices remain the same. And so the question is, why are refineries closing if they're so profitable right now? Well, the reason why they're closing is because refiners aren't rushing to add capacity, because prior to the pandemic, fuel demand was plateauing in the US. And the payback period for refineries on average is a long time. A refinery can take up to 20 years to recoup the initial investment, making the current business case for a new plant not necessarily feasible. And add into the fact that banks and other institutions are sort of divesting from oil, it's becoming even more expensive to build a refinery. And so the question is there relief at the pump coming anytime soon? Well, the end of spring maintenance season for fuel makers could add an additional $2.5 million of barrels of capacity as the plants come back online. So that is significant. But COVID-19 lockdowns in China are keeping a lid on global fuel demand. So that's that crude prices. And so if those lift, there could be a competition for fuel supplies, including crude, which could push the crude prices up, as well as just gasoline products or fuel type products up. And this is what I was talking about the hurricane season. This year's Atlantic hurricane season is forecasted to be more active than usual. And if a significant amount of refining capacity were forced offline, similar to past seasons, the US could actually run out of certain fuels, which means that the US would be forced to import more of those fuels, which of course puts upward pressure on those prices. So what's the conclusion here? Well, you can see here that higher oil prices or higher gasoline prices presents policymakers with a difficult dilemma. They can either increase rates to reduce inflation and further reduce demand, or leave rates unchanged and accept higher inflation. In my opinion, higher oil prices for longer can make a small part of the overall oil market demand more elastic as people shift to EV or work more from home. But I think policymakers have run into a problem where they can't allow inflation to surge even more than it already has. And so they have to risk putting the economy into a recession by raising those rates. And that's kind of what we're seeing from the messaging from the Fed. So could higher oil prices lead to a recession? My conclusion is it could very likely happen, and it's something that we got to pay attention to. So in this environment, I'm keeping some fresh cash on the side to pull the trigger just in case if there is a major market contraction. Now, of course, one way to gauge whether or not the market is cheap or not is by using the tracker that we provide to the Patreon. So from this tracker, you can see that there's 6 companies right now that are trading under 50% of their intrinsic value, and there's 20 names that are trading at around that 50% of their intrinsic value. And then there's a whole slew of names that you don't see here that are trading slightly above. So there's a lot of room for the market to come down. And so in order for you to get access to that tracker, where each one of those tickers comes with a full granular detailed model, you can get access to that at the lower tier level for the Patreons. And like I always say, there's no risk to you, because if you decide that it's not for you, within the first month, send me a message on the Patreon and I'll fully refund that first month's payment. Now, the other thing that I want to point out is that very soon I'm going to be putting out a video talking about, did we just have a bear market rally? And so in order for you to not miss the great content that's coming out on this channel, please take a second and hit that red subscribe button and ring that notification bell to be notified when that video is uploaded. Also, I'm currently releasing the Alibaba Q4 analysis in a 4-part series. And to get to the latest video of that series, click right here.